the bond yield holders did not appreciate the rate cuts. And you can see that they didn't appreciate it because right after the federal funds rate that they were announced that it was going lower, you could see that the rates for, or at least the bond yields, were going higher, specifically for the 10-year. Now, the 10-year is important because that is correlated to our mortgage yields. And if the 10-year goes higher, then mortgage yields go higher, which essentially people's monthly payment for their mortgages go higher. Now, why is that? Why did they not like the rate cuts, right? A lot of people like the rate cuts. Stockholders like the rate cuts. Business owners, people that own mortgages, they appreciated the rates going lower, but not the bond yield holders because they're worried about inflation. If inflation goes higher, right, which is what they're expecting when you lower the yield and you have more liquidity in the market, they're afraid that they're not getting the right pricing from the bond yields right now. So essentially, they're either not going to buy the bonds at the current yield that they're giving, or they might be selling their bonds, which is more problematic. So very interesting with what's going on in the bond markets at the moment.